Good morning, everyone. Ken here, coming live from Sparks. We have a special guest again today. She was actually visited us 1 year ago, and her name is Jane Mortimore. How you doing, Jane?
I'm well, Ken. How you doing?
So we're actually coming live from her office, and as everyone knows, we like to do some Facebook Live and talk about things that are impacting the real estate market. And Jane works for Allstate, and she provides homeowners insurance and some various other insurances for a lot of our clients. She's actually a member of our BNI group that I joined last year, Truckee Meadows BNI. So she's one of our go-to people for insurance. So we're going to go through about 10 minutes here and go rapid fire on some of the things that I see as a challenge for insurance in the real estate transaction. You ready?
Yeah.
So first, tell us a little bit about you, what you like to do, what company you work for, and then let's get your name and number up there so that people can call. And if anyone has any questions live, feel free to comment below, and maybe we can pick up the questions as we go.
Okay, sounds good. So I'm Jane Mortimore. I'm with Allstate Insurance. Been with them for 15 years, almost going on 16 years.
Wow.
Yeah, our agency is based out on Vista Boulevard with the Michelle Terrelac agency. And just that's what I know. That's what I've been doing.
And you're a big
for
soccer
a while.
fan, I hear.
Oh yeah, that is one of my favorite hobbies is the Premier League soccer. So that's how I pretty much spend my weekends, watching soccer and have 2 kids, and they kind of keep me busy, and that's
Great.
about it.
So what's your number, and so they can get a hold of you, and then we'll put it on the screen as well. But just want to put it out there early, and we'll.
So our office here is 775-626-3400. Or you can call my cell too.
Okay.
So you can give me cell.
Great. I'll give them that.
Okay,
No, I'll put that up. So,
okay.
All right, let's go. Rapid fire. Are you ready?
All right.
So it's going to be about 10 minutes. We're going to cover like 5 to 6 different topics.
All right.
So putting you in the hot seat here. So the biggest question I get a lot from people is they're in contract with us. We're getting to the end, and when you buy a home, they have an insurer, or if you have a mortgage, you need home insurance. So the question I get is, when do you get involved in the real estate transaction? How does that transpire? We're in it towards the end, and does the lender call you to the title company? Who calls you and gets you involved?
Mostly it's going to be the lender. So it's always going to be the lender who either initiates for the customer to call me directly to get an insurance quote, or the lender will reach out. So basically, they're trying to, in the process, they're trying to figure out how much is your mortgage payment going to be, and they have to factor in as well. Part of that is going to be homeowners insurance and taxes, and so they're always going to need a quote initially, so they have a ballpark idea of what that payment's going to be. So it usually is the lender prompting that are insured or the customer to call us directly. And sometimes if it's really close to closing and they haven't got something yet, or another insurance company hasn't been able to provide something, or there's been a glitch, then the lender's calling out to me directly and saying, hey, I need a quote real quick, ASAP. It's
so
urgent.
They can't close, can they?
They can't close unless they've got they've gotten insurance.
So we usually prompt our customers to call one of our preferred lenders, or not lenders, insurance companies like yourself. So keep that in mind that as you get towards the end of a real estate transaction, you got to have insurance, or particularly if you have a mortgage company, they're not going to allow you to close.
Exactly.
And if you own the property outright, though, you can go without insurance, correct? I mean,
absolutely.
But it's not a good idea.
It's not a good idea. It's your biggest investment. It's and it's expensive purchase. And if that house ever burnt down to the ground, you want some way to be able to rebuild that. So it's not required if you don't have a mortgage, but highly recommended. But definitely, if there's a mortgage, the mortgage is always going to require that you have insurance.
So 10 days before closing, we usually put you in touch with someone like Jane and start looking into those options. So when someone does call you, what I'd like to talk about, so our clients are are informed when they call you, what are the top 3 things they need to be asking a insurance agent like yourself to be knowledgeable about what they're getting for what they're paying for in a policy?
Well, mostly the biggest thing you're looking at is dwelling coverage. And so what essentially that's doing is we're going to look at taking the features of your home. What's the square footage of your home? Is it single story? Is it two story? Is it stucco? All the features, and we're going to put that in a quoting platform, and it's going to estimate the cost to rebuild your home. That's going to then give us the dwelling protection. That's really going to be the most critical, because that's what's going to those limits are going to be what the insurance company is going to pay out to be able to rebuild your home if you have a total loss.
Okay.
So it's really important that we get that accurately. What I try to explain to people is right now the market is really hot. So obviously what you're purchasing a house for is not necessarily what the insurance is going to insure it for, because when you purchase a home, you're looking at it as purchasing the structure, the land, and the location. That's all baked into part of that purchase price.
Yep.
But the insurance is only focused on the structure and the cost to rebuild. Do we have enough money to rebuild that home if something happens to it? And so, of course, based on the features, that's how we establish that. We don't cover the land. It's just rebuilding that structure. So that's what we want to look at and make sure.
Right, because if it burns down, the land's still there.
The land's still
there. So that doesn't need to be calculated into the price per square foot to replace it.
Exactly.
And then content.
So, of course, as well as insuring the structure, you want to make sure everything inside it is going to be protected. So, of course, your contents are going to be covered. Typically, contents are covered at 75% of the dwelling. So whatever the dwelling is, contents are going to be 75% of that. And I think that's pretty standard in the insurance industry. But it gives you plenty of coverage. So obviously contents are important.
Right.
And then liability. So you want to be protected in case somebody is injured on your property and now they're going to try to drag you into a lawsuit. So we want to make sure that you're protected there as well.
So those are the top three things. So when you call in, those are the questions they'll be asking. There's additional coverages. We won't cover this because there's flood insurance, there's earthquake insurance, but we'll have to come back and cover those because we got a lot to go through here. The other thing is we have a lot of people buying townhomes and condos, which is a different setup, a shared wall versus a detached single family. Can you quickly discuss what the difference is on an insurance policy between the condo, attached wall, townhome versus single family?
So typically, when you have a single family home, you get the separate insurance, and we're covering everything. We're covering the structure to rebuild it, the outside, the inside, everything. But if you purchase a condo or a townhome, typically it's there's two policies involved. You're going to have the master policy that covers the exterior of the property, and then you're going to purchase a policy with me that would cover the interior, kind of the studs in, also known as a walls in policy.
So I have a question. When you say master policy, that you pay a fee every month. That's the HOA covering that?
HOA. So it's the HOA that provide the master policy that cover the outside. And so then we're covering the inside. So basically, when you have purchase a condo, you're going to have two insurance policies basically.
So your own, and then through the association.
Through the association, and then your own personal. That's the type of policy that I would write. Okay,
so that's the difference. So we get a lot of people are finding it affordable to get a townhome right now. Just because cheaper prices. So that's a question we get a lot.
And it's actually, condo insurance is actually quite inexpensive. The two main coverages again within a walls in policy or condo insurance is your personal contents, so your personal property is going to be covered, and then also your the building structure, the building contents. So that's everything like the sheetrock, the countertops in your kitchen, your bathtub and shower. All of that, all the permanent structural stuff within the condo, that's going to be covered under the building protection. Then you're going to have your content coverage. And then there's other things, and one special coverage that Allstate do that a lot of other companies don't cover, so just the plug here for Allstate.
No problem.
Is called extended deductible protection. And basically what that does is your master policy is going to have its own deductible. It could be as low as $2,500, but all the way up to $10,000.
Wow.
If you have a loss and they have a $5,000 deductible, you're going to be out of pocket that.
Wow.
So if you purchase insurance through Allstate for your condo, we actually cover that deductible, and we will pick that amount that you need. And if you ever have a loss, we'll fill in that gap so you don't have a void there. And
wow.
It's
so
great coverage.
Does the policy for the HOA tell you what that deductible is?
It should.
Okay.
Yeah,
and you look into
should
that.
Be in there.
And then,
yeah.
Okay. That's great, because a lot of companies do not cover that.
No, they don't.
And then
do
you're
that.
stuck covering, a huge amount. $10,000 is a significant hit to most people's budget.
Well, it is. If you have damage of if you have damage for $20,000 and they're going to pay out to you minus the $5,000 deductible, you've got to find that $5,000 somewhere to make those repairs.
Okay.
So
Good. So we're going to move along here. So the one thing that we're coming across a lot right now are rent backs. So what we have in a real estate transaction is a seller sells their home and needs a month to rent back to find a new property or get into the new property. And it's a huge mistake that we're seeing, and I want you to kind of comment on it, is when you're a seller and you become a tenant, essentially you've closed on your house, you no longer own it,
yeah.
and then the buyer comes in. There's lots of moving parts here. So what does the seller need to do first? I'll ask that question first. And then what does a buyer need to do? Because now they are moving into a circumstance for a rent back where they're not necessarily,
They're not, yeah.
they need a different insurance policy,
Yeah.
almost like a tenant relationship or a renter, landlord. So kind of talk about that.
I do see this as actually really common, and a lot of times I think in this transaction, the involved parties don't really realize how it actually impacts the insurance on it. So if we have a buyer that's buying a home, they know, let's say you go back to your first question. So the seller sells their home to somebody, but they are renting back for a month. So now they're no longer going to be needing their homeowner's insurance, because the homeowner is for the structure. They no longer own that home. So that kind of null and voids and ends that contract. But what they're going to need when they rent back for a month or whatever is renter's insurance, because they still need protection for their contents. So they're going to need to get content coverage, which is most commonly known as renter's insurance. And then for the actual...
And liability, too. I mean, they can still get liability.
Liability comes normally included
Okay.
with a policy, so they'll have liability protection.
Great.
So, of course, that's where you have to change the insurance contracts there. And then as a buyer, when you buy that home and your intent is to buy it as your primary residence and you're going to be owner-occupied, you get homeowner's insurance. But if you technically aren't living in there for a month or
during
2
the rent back
months
period,
and you have a tenant living in there, you now need to get a landlord's policy. And that's the type of thing I try to educate and explain, that, hey, I might be writing you some homeowner's insurance, but for this first 2 months, I'm going to have to put a temporary landlord's policy in place for you.
Right.
Because it's tenant occupied, and that's a whole different contract and a lot of different coverages there.
Yeah, so be careful out there, and we talk to our clients about this, but essentially if you're doing a rent back, you need 2 policies. If you're a new owner, is the first to cover a tenant, a landlord's policy, and then it switches. Because what my understanding, and correct me if I'm wrong, is if they have a problem during that rent back period and you're the new buyer and now you're the owner, and you have your primary occupant insurance in there, they're not going to cover a problem if you're not in there, correct?
Oh, no. A claim, seriously, and I've seen this happen, a claim could be denied if you file a claim and the adjuster comes out to investigate and look what's happened, and they realize, well, you no longer own this house, or you rented it. It's a whole different concept at that point.
Contracting.
So you really need. That is where the realtor, the clients involved, the agent, they all need to kind of be aware that it's not just a simple, oh, no problem, you can just live in it and rent back for a month. There's the insurance aspect of it too, and it's really critical that that's addressed.
And it only it only takes one problem, right, at the property, and they flood it or something, and you're not covered. So then you have the new home that's damaged. So that's something to pay attention to. And then
Definitely.
We're running long on time here, but I want to get one more in, just because we are here already. So I want to talk about investment properties. So we have a lot of clients. There's a lot of people out there that own rentals. Yeah. And I want you to kind of talk about, from a perspective of a landlord, what are the different policies out there? And I'm just going to throw some out there. Let's talk about having your tenant get renter's insurance with liability coverage, umbrella, and then the type of coverage that a landlord needs on there. So we can start with, let's start with the type of coverage a landlord has.
So if you purchase investment properties and you have rental properties, which is great, we typically would insure those with a landlord's policy. Now, that's covering the structure. There'll be a little bit of content coverage, not as much as if you lived in it yourself, because really we're just going to insure some appliances, some of your personal property that might be there to service the property. So a little bit of content, but mostly the biggest thing is liability. So we always want to put maximum liability protection on the landlords. And what I really advise, and I do this a lot for my customers that have rental properties, is to get that personal umbrella policy. You definitely need to get that excess liability. Minimum is normally $1 million, but it can go all the way up to $5 million. And the reason we do that is, if there's a loss, the likelihood, there's more risk and exposure of something happening at a rental property. You're not there the whole entire time. You're kind of trusting in your tenant to take care and be responsible. But if something happens, that's why it's better to be well protected and have that personal umbrella policy.
Right. And they're pretty cheap, right? I mean, $200 for $1 million, $200 to $300.
Personal umbrella policies are very inexpensive for what, if you think about what they protect and what they offer. Absolutely. If we've had in a situation where we had a client who had a rental and a tenant had a guest over, and there was a water heater explosion. There was some issue there, and there was some severe injuries. So we know a medical's so expensive. $100,000 in liabilities doesn't go very far anymore.
So liability is something that they should be looking for. And
and vandalism and burglary coverage doesn't automatically come as part of the policy, so you want to make sure that we're adding that additionally as well.
Great.
So those are some tips.
And then what about having a contract in place that requires your tenants to get, because the biggest misnomer out there is, and we've had this happen, the toilet overruns, floods the whole house. The tenant now is looking around saying, well, all my stuff's ruined because we have 4 inches of water in the house. And if they don't have renter's insurance, the landlord's not responsible to cover that. So that's one reason we have it.
So we do always recommend that if you are a landlord, that you do require your tenant to have renter's insurance. Renter's insurance is very inexpensive, but it would cover your contents and provide you with some liability protection.
The tenants.
Yeah, so the tenant, exactly.
Right. Okay.
So if you're the tenant purchases their own renter's insurance, so they've got covered. So they're covered for their own contents, because a landlord's policy, the owner of the home doesn't have coverage on their landlords for that tenant's contents. So it's very important that I recommend that every landlord, owner of that home, requires their tenant to have their own renter's insurance. Super inexpensive, covers their personal property, has liability. Another really nice aspect to it is, if there ever is a loss at the home and there's damage and while you have to have it repaired, you can't live in it, we'll actually pay for you to live somewhere else temporarily. So it covers rented somewhere else for a month or so.
And we have this right now. One of our tenants came from a situation where upstairs bathroom overflowed, destroyed of his, and now his insurance company, well, actually their insurance company is paying his rent right now. So how do you make sure as a landlord that your tenant is actually paying their bill? Can you be added on the policy, or how do you get notified?
Do you know what? That's a great point actually, because there are some landlords, some clients that if they are renting out, they do ask to be added onto the renters as an interested party.
Okay.
And so it's not necessarily that we inform about their bills being paid, but it's notified if there's a cancellation. So if the policy was canceled or a cancellation notice was sent out, typically the interested party would also be notified.
Okay, yeah, because you want to make sure that they're still have coverage. Because I see we've had tenants in the past who get coverage for the first year, don't renew it.
And don't renew it.
And if you're not on the policy as an additional insurer or an interested party, you'll never know that. So.
Yeah, with ours it's just an interested party. We wouldn't list you as an additional insured because you're not really technically have insurable interest in that, but we definitely could list you as an interested party, so you're notified of cancellations.
So lots of great information, Jane. I appreciate it. You're always one of our favorite guests. She came in, I think, episode 7, and we're going on episode 70. So I'm going to try and get you back on, come back in sooner, because there's some other stuff we can cover. I mean, there's a lot of stuff that's pretty critical to the real estate transaction for insurance. So
all right.
Thanks for coming in.
Thanks, my friend.
Give me your number one more time, your name and number, and how they can contact you.
Okay, Jane with Allstate. It's 775-626-3400 when you're in good hands.
That's great. Okay. Well, you take care, stay safe, and we'll talk to you soon.
All right. Thanks, Ken.
Thank you. We'll see you next time where we have more guests lined up next week. If you want to be on our podcast, we go live once a week and would love some new guests. Give us a call or shoot us a message. You guys have a great week. Thanks.